Happy Sunday, friends, and welcome back to another weekly video where we take a look at setups and things to consider for the week ahead in the currency market specifically. We'll also touch on things like gold and potentially the S&P, stuff like that. But without further ado, welcome to the video. Make sure to hit the thumbs up button and subscribe if you look forward to these each week, and let's go ahead and jump right in. Starting with the dollar. The dollar last week, very interesting thing to watch. Notice one thing about the dollar that was incredibly bullish last week. We're looking at the 4-hour chart. If we take a quick look at the support zone drawn right here, which we discussed last week, notice something very intriguing. We broke out here and we held. What does this tell us about the dollar? And specifically, you can probably already imagine, I'm talking about this candle right here. What that candle tells us right there is that sellers came in very strong for a brief period of time. They shot price underneath support with a lot of conviction, but then before that candle could close, buyers came in very strong, closed it above price, and continued to push it for the remainder of Friday's price action. Okay, what this tells us to me, US dollar, super strong, still strong. And this is not a surprise when we hear from the Fed, basically the Fed update for you guys. If you're new to fundamentals or you just want to know the bare basics of the fundamentals, last week the Fed basically remained super unwavering in promising that it's going to continue to combat inflation, raise interest rates, and it was basically like a fresh push to the bullish side for the dollar off of this idea that, okay, well, the Fed is not backing down. Even if it means sending the economy into the recession, that is exactly what they were hinting at. They're more afraid of inflation than they are a recession, basically. And with that in mind, in my opinion, I am looking specifically for US dollar long scenarios only, back to only staying bullish on the dollar. And again, this dollar, will it crack eventually? Sure. But trying to time that has been incredibly difficult. We've seen a few short counter trends, but for the most part, we've had incredibly long stretched bullish runs on the dollar, which in my opinion could likely continue as we come into this area today. So let's go look at some US dollar specific ideas, starting with EURUSD. The euro dollar is the most popular and most traded asset in the world. And where are we going to be looking to trade this? Well, look what happened Friday. The inverse of the dollar index, we had a big breakout to the upside, followed by rejection like crazy right here. Big sell-off. So if you're looking at this thing from an intraday perspective, maybe the day traders out there are saying, oh, well, if it starts breaking out to the downside, perhaps there's something that we could trade here. Well, take a look at this. We've got a very little tight, let's see if I can draw this correctly. Just a little bit of a counter trend going on. So this is a 4-hour chart, right? So you have the downward trend sort of fully spreading its wings here and taking off. We rejected off of this 50 period moving average here. So that was huge for sellers, pushing price back down. Now the EURUSD is one that I would like to personally be short, and I'm not afraid of the idea of looking for breaks and retests here going into this week. So let's pull the moving averages off for a second, and I'll show you a couple things from a technical analysis perspective of what I'd be looking for. If we could get a breakout of this support zone, I'd actually be interested in potentially saying, okay, breaks, retests, continuations. After looking at everything that the Fed basically discussed in their Fed symposium, and Jerome Powell's speech this week, basically the dollar continues to look very attractive in my view, and I am willing to take buys on the dollar, more specifically in this case, sells on the euro, buys on the dollar, right? Which would lead me to short the pair. So possibly something like this, a breakout of this area right around back underneath parity. We're under the parity level, by the way. We broke briefly above it before sellers got a hold of that 1.0 mark and sold back underneath that zone. Breakouts, retests, I think that we have potential to continue the downward spiral for the EURUSD. Now, one more thing I should add with the euro dollar, I was looking at it on the Edge Finder, which is our market scanner, and it has a strong sell reading across the board. Well, I guess it's only a sell reading, but a lot of indicators telling us to be short biased on this pair. None, the least of which is actually this right here. This is our market forecast, our price forecast indicator that we built. And all it does is it takes momentum of recent price action and gives us a scatter plot of where we think price could be headed in the coming days. So here to end the month, it's basically saying that the Euro USD will likely be somewhere between 0.9971 and 0.9702. It just gives us a loose forecast of market, basically based on the momentum. If momentum does continue, this is what we probably would likely see on the price chart. So of course I use this to help me guide where I'm looking for prices to go. And then in addition to that, what we can see is that we get a -5 score. COT data is favoring the US dollar heavily. So if we take a look right here in terms of the commitment of traders data, which is institutional money, what is the hedge funds and the banks and things like that? What are they doing? Well, they're long the dollar. Okay. And then the euro, conversely, they're actually slightly more short the euro. So that's sort of a bias to go short the euro USD if you're trying to align yourself with smart money, right? So that is that retail sentiment. The crowd is very, very much long on euro USD. So that is going to lean me towards not buying it myself, but rather shorting it, going against the crowd that tends to lose money. Seasonality, you can take a look at seasonality. This one is slightly positive for the month of August, but notice something, you guys. We're about to go into September, and historically, September leans negative for the Euro USD. So this is how we can basically justify this is probably actually going to go to a -6, all other figures staying the same, as this potentially becomes negative in the next few days. The trend reading, very strong to the downside. We get a -2 in that category. GDP growth favors the Euro area slightly, and that is the one thing on this list that goes against our bias. Everything else, inflation, unemployment, and interest rates, we do use fundamentals to gauge where we're basically biased towards, and that's how we get the rest of these. Inflation, again, lower in the US, that's better. Interest rates higher in the US, that's better. And then unemployment, lower in the US, that's better. So all those things considered, we have a sell bias on the Euro USD, we have a price forecast, and now we have an idea in terms of a technical analysis standpoint where I could potentially look to get short on Euro dollar, with the idea being potentially a target back at the lows, but really I'd be looking for a continuation breakout. That is usually how I'll take a trade, is I'll look for something like this, I'll sell it of course, but then I'm looking to put a stop in place and let it run much further than just the low of the move. So that's what I'm looking at for Euro USD. I hope that was helpful to you. We'll take a look now. We'll switch gears and maybe take a look at gold here for a second. Here's gold, and gold actually also has been a sell bias on the let's see if we can pull it up here on the Edge Finder. Yep, still a strong sell, and this is mostly just going off of a couple key factors, but a lot of the economics coming out of the U.S., especially with the Fed being so incredibly hawkish recently, that's put a major damper on the gold price. So gold has launched back down to the downside here. Big breakout of this little market structure here off of the 4-hour chart, and away we go. So if you're looking at the gold market for me right now, again from a short-term perspective, it's very hard to justify going long at this point, but a longer term perspective, in my opinion, I'm buying gold if we get down into these zones from just a strictly a more of an investing standpoint. But for the day traders out, for the swing traders out there, we have a lower high, we have sellers coming in at this area. I mean, it is not looking good for short-term buys here on gold. As we come back down to the lows, if you're watching this and you're a seller, right? If you're looking at this thing from from a bearish bias, watch for some sort of breakout here. If this happens, there may be an opportunity to do a similar thing to the Euro USD, break and retest, looking for a slide to the downside. This year, 2022, has been incredibly good for just looking for trend continuation plays, and watching specifically in this case for a breakout below this level could offer us another scenario like that, where you just get a breakout and then it just slips to the downside and keeps going, and you're able to ride those sort of moves. Next up, we'll take a look at USDJPY here, and then we'll take a look at some other pound pairs as well, or sorry, some yen pairs. So dollar yen looks very healthy here to the upside. We had a really strong Friday for the dollar yen, closing just near the top of this consolidation zone. If you're looking at this thing from a 4-hour chart perspective, or perhaps a swing trading perspective, watch for a breakout of this level, because again, I think We're getting deja vu, the same concept over and over here. We are talking about a major structure point being tested towards the end of last week. Notice how multiple candles struggled to close above this zone here, but now we came back with conviction here towards the end of last week. Doesn't necessarily mean that we're going to fly through this level, but if we see the break, if we see a candle close like this, for example, outside of this level of resistance, any attempt to retest this zone for me is a go signal, right? It's a buy signal. The dollar looks incredibly hawkish from the Fed's POV, and then it looks very strong just from a price action standpoint as well. So if we were to set up a trade like that, let's talk about this. For me, usually how I like to trade one of these is I like to use the middle of a range as sort of my stop loss point. Because the idea here, you guys, is like, let's say price breaks out to the upside. We get a big move up here. Okay, great. And then we get that pullback. Well, at this point, if this thing is a fake breakout, I need to get out at a reasonable time. So usually what that's going to entail is, well, if it comes right back into this consolidation zone, I'm just going to stop out of the trade. Conversely, if this thing really is a true breakout, it should hold that retest very quickly, and we're expecting a pretty good run to the upside very quickly as buyers jump onto the gravy train. But again, that's why we have stop loss in place. We always have to manage that risk in case we are absolutely dead wrong about an idea. So where could dollar yen go? Well, for those of you guys who like to target structure, we have a previous high right here that we can actually mark with this level like this, right? And if you want to give it a zone, you could go something like this, right? A lot of momentum, a lot of bullishness there towards the end of the week, looking for some sort of break, retest, continuation up into this zone here, 139.36, give or take. And that looks pretty healthy for dollar yen, in my opinion, going into this week. We'll see if that can play out correctly, but nice little trade set up there, in my personal opinion. I do like dollar yen long. Let's take a look at GJ, another, of course, interesting one to talk about. Now, pound yen has not gotten the love that dollar yen and some of the other ones have. Why is this? Well, the pound itself is incredibly unattractive in terms of fundamentals, in my opinion. Let's go take a quick look at the pound. And this is why, again, this is why we built this software, because a lot of times new traders, they have no idea about fundamentals, and they're like, well, I just want to buy the pound yen. It looks cool, right? But you have to be very careful when you look at this stuff, because the pound is very unattractive for good reason. The pound yen getting a sell bias despite some of the yen weakness that came in last week. Take a look at this. If we look at inflation readings in the UK are at 10.1%. That's huge. If we take a look at GDP growth, we have a negative GDP growth in the UK. If we take a look at unemployment, still 3.8, higher than the yen. And then interest rates, yes, it's at 1.75, but comparatively speaking to some of the other central banks that have less inflation, we see it relatively low. So the yen is considered that safe haven currency, and the pound is considered a risky asset, but now it's looking super unattractive with such crippling inflation levels and the expectation from the Bank of England for inflation to continue to rise at a dramatic pace makes the pound really unattractive. So despite the yen being attractive, to me, pound yen does not look like a buy, even if price starts to make a bit of a recovery. For me, it's just not attractive to the upside. In fact, if you're biased on the bullish side for the yen, to me, this would actually be more attractive right here. We'd be looking for some sort of a breakout the other direction. If we see some yen strength come back in and this big blow off top here turns into a breakout to the downside, watch for breakouts and retests, and perhaps you're looking to short this thing. Again, fundamentally, not an attractive currency in my opinion right now. We have a really, really weak expectation from the Bank of England. They are expected to lag other central banks in the race for interest rate hikes, and especially against something like the US dollar. We could take a look at pound USD. This thing just looks so incredibly weak, and the Edge Finder also helps us to pick those things out. So if we take a look at the pound USD, this thing has a strong sell, right? So again, keeping all that in mind, we can use that to our advantage. By the way, you guys, if you want that tool, if you would like to see the Edge Finder on your own screen, you can get this for a discounted rate by using the link and promo code that is down below in the description. You get a huge discount because you're a channel subscriber or you watch the channel, you can get a discount on it. Again, there will be a link down below, all the information about what you get with this tool. You get a million things. You can track what COT data is doing. You can see all assets in one single view. We can also take a look at, for example, seasonality is a new one that we made a specific window for. So now you can go in here and you can check the seasonality of your favorite assets. Give it a second to load. But like, for example, you can go in here and, like, let's say you are looking at the historical tendencies of gold, right? And you want to say, well, during the month of August, it's positive. During the month of September, it tends to be negative, et cetera, et cetera. You can actually use this to your advantage. Using the Edge Finder. So the whole purpose of it is to equip retail traders like you and I with tools that can actually help us to build profitable trading strategies based not just on technical analysis, but on data, trends, fundamentals, things like that. It simplifies it for people who are newer to this stuff. So again, take advantage of a discounted rate by getting the tool down below in the description. And if you have any questions, there'll also be a pinned comment to send a message to one of my team members who will be happy to help you or set you up with a free trial, etc. So click the link down below in the description and there you go. All right, there's your little promo. Again, that's our software tool. We've spent so many hours and so much money building that tool. We've had a lot of people really, really love the tool, and it's been a fantastic project for us. Again, my company, we focus on building tools for traders. So having that product kind of be a crowd favorite has been really awesome for us to watch. It's been very satisfying considering how much time we've spent on it. The main thing that I'm looking at with Pound USD from a sell perspective would be this really big failure that we had on Friday, right? We had this level multiple times, hold, and then we broke, close underneath, and now we are back down under the lows. So now we have to repeat that process. We say, well, we're sitting at support, but if this level breaks, this could be same story all over again, right? So watch for a breakout, and if it does in fact break out, we'd have to consider this resistance, or at least that's how I would pay attention to it, right? And then from there, depending on how you trade, maybe you're like, okay, I'd rather keep the stop pretty tight. I don't want it to go back into this consolidation, so stop loss in the middle of the consolidation zone. And from there, looking for at least a 2-to-1. But you know, this thing, who knows how low it can go if this thing continues to break. I mean, it's trading at the yearly lows, but it doesn't mean that it can't go much, much lower, right? I had somebody ask, you know, hey, if something's trading at its yearly low, shouldn't it be time to start buying it? And the answer is, well, not until the fundamentals behind it change, because markets can trend in one direction for a very, very long time. Again, look at the EURUSD, scroll out in a long period of time. It's been trending down for years, right? So something like this could be interesting to watch out for this week on the pound against the US dollar. Let's take a look at some of the Kiwi pairs. So Kiwi dollar also looking incredibly weak here, coming down very, very hard underneath this level of support. And this is doing exactly what we were talking about with pound dollar, right? It's actually doing it already. We broke underneath structure right here. So this level of what was support, we're going to have to turn that into resistance, right? So the idea here would be a swing back the other direction. And now you get even more interesting because you can probably draw your fibs and get down on the lower time frames. Here's your like 1 hour view, right? So let's tighten this up just a little bit. Here's your 1 hour view, assuming we start to get a pullback pretty soon. If we do, right? Doesn't necessarily mean we have to. Possibly something like this. If you're bullish on the dollar, especially, this could be a pretty decent risk reward trade. There's a 2-to-1, just talking about a swing back the other direction, pull back to support, turned resistance, and looking for the continuation. But you know, the NZDUSD also incredibly weak, right, against the dollar. It had a little bit of a pop, but the dollar just came in very, very strong this week with the Federal Reserve meeting and Jerome Powell staying so strong. Now, I mentioned that we would talk a little bit about the indices, so let's just take a quick look at something like S&P 500. Look at the stock market, you guys. It dropped off of a cliff. We broke through support big time here. Again, lots of levels on Friday being broken, and that leaves us on Monday with a lot of opportunities to potentially pick up the pieces and place some good trades. So if you're looking at the S&P 500, I don't personally like to short this thing. I think there's other assets that I'd rather short if I wanted to be short on risk on assets. The stock market tends to rise over time, and the snapbacks here can be very aggressive. So I'm not necessarily looking to short the S&P 500, but clearly we have to acknowledge the fact that this thing thing looks very weak to end last week's price action. So even if it does start to get a recovery, be wary of the idea that this thing could be continuing to roll over. Are we going to retest the lows? By golly, I hope not from my stock portfolio's perspective, but it is not out of the window. It is not out of possibilities. It definitely could happen. And until price action changes back the other direction, we are purely just going to expect this thing to trail lower until we get a breakout back the other direction, right? So this is a pretty clear one directional move that looks to me like it has potential to continue. That's an impressive sell-off there that you don't see those sort of moves in the stock market very often. And usually when you do, they tend to, at least in the last few years, they tend to have continuation behind them. So we'll watch out for that this week. Again, watching a lot of the risk on assets. This could be of interest to us. And again, remember guys, get the Edge Finder if you haven't already. Support our project with this tool and get it for yourself for a one-time fee. The link is down below in the description, and that promo code will get you a super discount for subscribers. Thanks for watching, guys. Have a great trading week.